First things first, yes, small amounts can be invested. Small amounts invested regularly can grow into substantial wealth over time. There is a popular myth that investing is for those with lots of knowledge and a ton of money. This is simply not true. There are a number of investment platforms where you can get started investing from very small amounts. But before going for how to invest, it is important to know what the purpose is of your investment. What do you plan to use the funds for? Are you trying to save for your retirement? Do you intend to buy a house in a few years? Or perhaps your children's education? Based on the goals, you will be able to define the timelines and the type of returns you need. You don't need to have a lump sum to start investing. Actually, investing small amounts of money regularly can be better than investing a large lump sum in one go. By investing a small amount of money each month, you are relatively less vulnerable to market fluctuations. You are also likely to end up buying more shares when they are cheap and fewer when they are expensive. It's not about how small amount to invest, but how early you are going to invest that will change the results. If you are hesitant to venture into stocks directly, you can consider mutual funds. Many mutual funds offer SIP, where you can invest as little as rupees 500 every month in equity funds. This allows you to gain exposure to the stock market without having to invest individually in high-priced stocks. Mutual funds are managed by professional portfolio managers who are responsible for selecting and managing the fund's investments in line with its investment objectives and strategies. These managers conduct research, analyze market trends, and make investment decisions to achieve the fund's stated goals. Therefore, as we told you before, it is important to have your goal for investing, whether it is for short-term or long-term goal. Next is exchange-traded funds. ETFs provide investors with a cost-effective, liquid, and diversified way to invest in various asset classes and market segments. Whether you're a beginner or experienced investor, ETFs can be a valuable addition to your investment portfolio. By investing in an ETF, you gain exposure to a diverse range of assets within that particular category. This diversification helps reduce the risk associated with investing in individual stocks or securities. ETFs trade on major stock exchanges throughout the trading day, just like individual stocks. This means you can buy or sell ETF shares at any time during market hours. ETFs generally have lower expense ratios. Your small savings can be invested in high-yield saving accounts. A high-yield savings account is a type of savings account offered by banks and credit unions that typically offers a higher interest rate compared to traditional savings accounts. The interest rates can vary depending on the financial institution and prevailing market conditions, but are typically higher. High-yield savings accounts typically compound interest on a daily or monthly basis, which means you earn interest on both the principal balance and any accrued interest. High-yield savings accounts can be a valuable tool for individuals looking to earn a competitive interest rate on their savings while maintaining liquidity and safety. While saving money might seem like a major roadblock, it is much easier than you think. All you need to do is start. Create a budget for your monthly expenses and factor in a fixed amount that you will save. Even if you can save rupees 1,000 per month, over time, it will help you invest. Investment is not a sprint. You need to start and stay for the wealth to be created. If you have $100 to invest, look for stocks that fall within your budget and find the best options. Slowly but surely, as your savings increase and your understanding of the market grows, you will have a portfolio of stocks that have been handpicked by you based on your investor profile. In the world of investing, small beginnings often lead to great endings. Take a help from robo-advisors. Robo-advisors are automated investment platforms that use algorithms and computer algorithms to create and manage investment portfolios for individuals. When you sign up for a robo-advisor platform, you typically start by answering a series of questions about your investment goals, risk tolerance, time horizon, and financial situation. Based on your answers, the robo-advisor determines an appropriate investment strategy for you. Using the information from your questionnaire, the robo-advisor algorithm selects a diversified mix of assets for your investment portfolio. This mix may include a combination of stocks, bonds, ETFs, and other asset classes based on your risk profile. Robo-advisors automatically rebalance your portfolio periodically to maintain the desired asset allocation. Most robo-advisor platforms provide users with online dashboards where they can track their investment performance, monitor portfolio allocations. Many also offer customer support via email, chat, or phone to assist users with any questions or concerns. There are several micro-investing apps available that allow you to invest small amounts of money. To get started, Users typically need to download the micro-investing app from the App Store or Google Play Store and create an account. Micro-investing apps often provide users with the option to set up automatic recurring investments. Users can choose to invest a set amount of money on a regular basis, such as daily, weekly, or monthly, without having to manually initiate transactions each time. Many micro-investing apps offer educational resources and tools to help users learn about investing, financial planning, and personal finance. While these apps provide an easy way to start investing with small amounts, be sure to research the fees and understand the investment options available. You don't need a lot of money to begin investing. All you need is consistency and commitment. While it may seem intimidating to start investing with a small amount of money, the most important thing is to start as soon as you can. By investing even a small amount consistently over time, you can potentially see your investments grow through the power of compound interest. Regarding compound interest and compounding assets, we provided a lot of information on this channel. Have a look on that also. I hope you gained value from this video. I wish you success in your financial journey. From the bottom of our hearts, thank you for joining us today. See you in the next video. Until then, take care.